Yeah, hi. This is this is Mark from Right Relying Trading, and this is the most recent of our proprietary training videos. And what I wanted to do was put together a lot of data that we had accumulated in the creation of our Auto Trader to provide you with updates regarding our entries and our strategies in an attempt to optimize our trading entries when we trade live. Now, just a couple of general rules that I would recommend that you very rarely violate when you trade, and I will also very rarely violate these in the training room. Now, we have a number of different signals for taking continuation trades in a confirmed trend. And the predictive value of the 50 simple moving average, which is right here, has turned out to be extremely high. Now, when we take a long trade in general, we want this average to be moving up when we take a trend trade. And obviously, when we take a short trend trade, we want that 50 to be moving down. Now, if the 50 is moving in the direction of our trend trade, that's going to significantly enhance uh, the success of the trade. The predictive value of the signal will be much greater, and the probability that we're going to get to our first target is going to be much greater. So we want to trade in the direction of the 50 as a general rule for all of our trend trades. Now, in addition, for our trend trading, we want to trade in the direction of our modified 15. So when the modified 15 and the 50 are both down and we get an appropriate signal in a setting that where we really like the market structure, where the whole setup of the trade works, but the 15 and the 50 are both down, that's going to make the probability of a successful short trade much, much higher. Same thing with the long trade. When we take a long trend trade, we want the direction of the 50 and the direction of the 15 to be moving to the upside. Now, these are general rules for our trend trades. Now, let's take a look at each one of our individual trend trade signals. Now, the first trend trade signal that we can look at, we have a few of them, is our I don't know why I'm having so much trouble locating a nice trend trade. It's probably because this is a holiday week and the market is choppy and bouncy. Um, but let's take a look. What I wanted to find was just a bare C candle, and the C's normally very often come with momentum signals. But let's take a look at a C candle that does. It's hard to find one without a momentum signal. but I will, if you bear with me for a second here. Now the C candle signal is one of the most conservative signals we have. And here's a real nice one right here. I'm not going to show you more than a couple because this is the third video. And you know what a C candle is. You know what it means. You know that it's overrunning all the short, or all the people who have gone short in this counter trend trade. Of all of our trend trades, it is the most conservative and the most successful. And you can see that when we take a C candle trade, when the 50 is heading up and the 15 is heading up, and we enter on a first pivot C, and I think everybody knows what that first pivot means. The probability of a successful trade here is going to be exceedingly high. Now that is a 26 tick trade. So this is trend trade number one. Is our C candle entry. Now, let's go to trend trade number two. And we see trend trade number two a lot. Trend trade number two is going to be our momentum signal. Now remember, we don't chase momentum. We look for price momentum divergence. And we have it right here. We look for, whoops, excuse me here. We look for lateral movement on price, confirmation and affirmation of the long. X is our triple momentum signal. It is a trend trade. You can see we have a confirmed and clear cut trend trade to the upside, 50 and 15. And we have ourselves a nice long. Now, so trend trade number two. Momentum entry is our momentum entry. Now, we're going to get a lot of signals where we get a momentum entry along with a C candle. And that's because along with the B, you get sideways movement into the 15, and that creates a scenario where if the C engulfs, it also gives you a perfect momentum entry setup. Again, price is moving laterally. You have price momentum divergence, and so you're going to get a dual signal. Now remember, you can only take a first pivot C, but if the C comes with a momentum signal, then you can take that entry as a momentum entry and not as a bear C candle. So here we have a nice momentum signal. Now the problem is that we're taking a short trade, and I did this on purpose. We have the 15 going down, but we have the 50 going up. And if you'll notice, and in this particular case, it did ek out 7 ticks, but this was a very aggressive trade, and it's one that I would not recommend. We want to take the trade where the 50 and the 15 are both moving in the same direction. Now, just with those two rules alone, we're going to eliminate a significant amount of chop, and the market isn't going to catch us. We have to wait for the market to set up structurally in an appropriate way before we're going to take a trade. Now, when you trade with specificity in order to eliminate trades and chop, and not continually get stopped out, you're going to wind up with moves that go past us, that pass us by. That can be 2, 3, or 4 points where they just don't give us conservative entries. That we cannot be concerned with those. Because if we're going to be concerned with getting on every single large price movement, then we're going to get, then the flip side of that is that we're going to get sucked into lots and lots of bad trades. So our specificity keeps us at a chop. We wait for appropriate alignment of the market. We're going to have to let some significant moves go past us. But as we all know, and for all the people in the trading room and all the people with the software, we know that it is not really about the number of wins. We can always capture wins with this software. It's going to show us the way every day to get multiple wins. What we have to do is we have to use the software to filter out the losses. And if we're extremely conservative with our trades, the software will successfully do that. Now let's take a look at our third trend trade. And our third trend trade is our strategy entry. Let's find a nice strategy entry for us. Now the strategy entry must be a pullback into a confirmed trend. The 50 or the 15, and here's a really nice one that we took for 18 ticks just a couple of days ago. We have the 50 moving up. We have the 15 moving up. We had a deep retracement. And we took a power entry and a trend trade long. And this was a really nice 18 tick trade, really just a couple of days before Christmas, and gave us a really nice win. So here is trend trade number 3. Power entry. Now, power entries can occur with very deep retracements, and occasionally a power entry is going to come against order flow, stochastic, and momentum, and we're going to take a look at those. But all the trades that we just discussed, Power entry number one, which is the ABC. Power entry number two, which is our momentum trade, our momentum entry. Power entry number three. I'm sorry. Let me start that over. Trend trade number one, which is the ABC. Trend trade or the C candle entry. Trend trade number two, which is the momentum entry. And trend trade number three, which is the power entry, are all going to come with order flow, stochastic, and momentum. And you can see that this was a beautiful two-line candle. So we know that order flow and momentum are with us with the power entry. Now we don't need order flow and momentum to be green. They can be blue. So we don't need a candle that's outlined in magenta or yellow or red or dark blue. But these retracements and these trend trades are going to come with the three line confirmation. Now let's look at our last trend trade. And I may have to reload my template because this happens occasionally. Because this is an entry that I did not discuss in any of the other videos, and that is our strategy entry. Now I'll just switch this to the Russell, and that should show our strategy entry. Okay. Now the strategy entry, like the power entry, is based on regression analysis. The market has to regress a certain percentage back, and then you need an affirmation of the trend in order to get a power entry, in order to get a strategy entry signal. Now let's find a good one. And we get a lot of good ones on the Russell. You can see we have a lot of nice C candles. A lot of good trend trades here. Just want to find a really, really nice example of a strategy entry. Again, projecting back in this right now in this tough market, it's a little bit tougher to find a nice conservative strategy entry. But I want to find a real good one for you. Now, the most successful of our trend trades, as I had mentioned, trade number one, ABC, or the C candle entry, most successful. Second most successful is the momentum entry. The third most successful is the power entry. And of our trend trades, even though it is still an extremely successful signal and one that we would take on any market when we see it when market structure is appropriate. But the least powerful signal of all is our strategy entry. And here is your perfect strategy entry. You can see it's a triangle. and it's simply based on regression. The market has moved up. It was a shaky move up. And then this candle confirmed the downtrend. And this was a great, great move. That was 55 tick trade. Now let's find one more strategy entry. And again, it's simply based on regression analysis. That's the logic of the indicator. Now the thing about the power entry is, and let me go back to the one that we just took, is that the power entry must come with order flow and momentum in your favor. So the strategy entry is not just a simplified indicator whose logic is based on the regression analysis alone, is based on the alignment of momentum. This requires not only there to be a specific type of regression into an intact uptrend or downtrend. It also requires that momentum and order flow be in our favor. So it's a little more sophisticated of a signal. Now you can see it's a great trade because you also have, there's your 50, and here is your 15, all moving down. Now, this is a good time to talk about our pivots. Now, I think this is the best pivot indicator that you're ever going to see on any software package on the market today. It took a long time for us to create it. Pivots are very arbitrary, and every time the market makes a jog, up or down, a small pivot is created. The question is how big of a market swing do you need before you need to consider the pivot as being significant? Now, after an enormous amount of forward testing that we have done in order to optimize the auto trader, we have found that a sensitivity of 100 on this pivot indicator creates significant pivots. And there are going to be some days like this trade here where we cannot trade into this intact pivot, where pivots are going to hold up successful trades. But we have tested this on hundreds and hundreds of days of market replay data. And on balance, not trading into these unbroken pivots are simply going to increase your equity curve. It is not profitable to trade into them. More will bounce than will break through. And remember, all it takes is one to bounce and for you to get stopped out. Then you need two winners to make up for it. So we do not trade into unbroken pivots, nor do we trade into the 50, nor do we trade into the 50, modified 15. We need a 2/3 candle close. Now the pivot indicator will automatically stop tracing out a pivot when 2/3 of the candle closes below it. It's going to tell you when it's broken. You have to assess the 50 and the 15 and simply make sure that you have a 2/3 candle close of either of these major trend lines before you have the okay to take a trade. So we've now gone through our 4 trend trades. 1, our C candle entry. 2, our momentum entry. 3, our power entry. And 4, our strategy entry. So trend trade number 4, strategy entry. Now, these are the most conservative trades entries that you're going to see anywhere on any software system. Trend trading is without a doubt the most profitable way to trade. I believe that that institutions create the trend. We want to be with them on every trade, and when we trade in a confirmed trend, and we take these retracements into an intact downtrend or an intact uptrend, as defined by both our 50 and our 15, and also by order flow, stochastic, and momentum, we're taking an extremely conservative entry. Now, we have two other types of trades that we take, and they're also extremely profitable trades. And I want to clearly define them for you. Now, one of them is our version of a reversal trade. Now, this is the trade where it's very commonly going to occur against order flow, stochastic, and momentum, or some combination thereof. Now, this is a power entry bounce off the 50. Now, of all the trades that we have, this is the riskiest based on our statistical analysis of all our trade entries. It also has the potential to be the most lucrative, because we're taking a bounce in which there's been a significant retracement all the way back to the 50. And it's not uncommon to see these trades move down 20, 25 or more ticks. So let me move back to crude oil, where I think we're going to find more of these. And I want to show you what I consider to be the most conservative power entries. Now, when I trade them in the trading room, it's up to you, based on what I just said, that these are the riskiest of all of our trade entries, but also potentially the most lucrative. So let's find a real good one here. And let me show you what I'm going to be looking for when I take one. Sorry, I hope I'm not giving you a vertigo here by flipping through these charts so much. But again, in this market, in the last few days, we have not seen a lot of great trading signals. And what I'm really looking for is not just a successful trade, but a very conservative successful trade. And that's the problem. It's really what I'm looking for here. Let's see. It's like a horrendous merry-go-round, but we'll find one. All right, here we go. Now, here's our power entry bounce off the 50. Now, the 50 must be sloping in the direction of the trade. That is a must. Number two, and you can see these are very, very, very deep retracements. Here's the uptrend. I'm sorry. Let's go back a little bit further. Here's the downtrend. Then this retreat, whoops. Then this retracement. Back into an intact downtrend. Now, the further away the 15 is from the 50, the better off you are. You want to at least have space from the entry to your first target before you hit the 15. That's number one. Number two, you do not want that modified 15 sloping up into your trade. So if that modified 15, it's fine if it's flat, but you do not want that modified 15 starting to curve up into the short trade. And number three, the candles that I like to take are the ones where you have a large body. You can see that this is has about a 7-tick body, and that shows that there's a lot of selling conviction here. And there's a very, very tiny candle body. There's more of a push and a pull between the bulls and the bears, and that brings us down to a little doji or a hammer. This is a nice candle body. Now, the one thing that I don't like about the trade is I would like the candle body itself to come right off the 50. And those are the power entries that are the most successful. Large candle body, right off the 50. The hardest this trade is pressing down on the 50 in the direction of your trade, the better. The further away the 15 is from your entry, the better as well. That is our version of a reversal trade, even though it really is not. It's just a deep retracement and then a movement back into the trend. I only call them reversal trades sort of in parentheses, because if you'll notice, this short trade comes against order flow, stochastic, and momentum. It's really based on a structural trade, and although we do not use Fibonacci, I would be willing to bet that a lot of these are multiples of Fibonacci retracement. Like, I don't know what percentage retracement this is into this downtrend, but I'll bet this uptrend maybe 50% or 62%. I think it's 62.8%. Those are all Fibonacci retracement multiples, and those are the ones that are going to give you your successful bounces. Now I just want to find one more for you. There was actually a terrific one on the Russell today, which I will show you, that I noticed. Now, it's a very, very risky one, and I'll show you why it was risky. And I saw it evolving. It's right here. Now it has features to the trade that I like and features that I don't like. And this is why you always have a little bit of discretion especially on trades like this. The 50 is heading up hard, which is exactly what you want in a long trade. And you have plenty of room between the 50 and the 15 for your first target. Now, even though the 15 is red, the slope is still flat. So the trade is not bending into the entry. It's not bending down. But the thing is, I don't like the fact that there's only 2 ticks of candle body here. I would like to see a little bit more buying confirmation. But what you do see is that the candle body comes right off the 50. And I really like that kind of trade. So this has a lot of positive features and a couple of negative ones. Positive feature, 50 is heading up hard. candle body comes right off the 50, which is sloping up hard, as I mentioned. The 15 is flat, even though it just turns red a little bit. And there's plenty of room from the entry to the first target. Now you can see this long trade comes against order flow, stochastic, and momentum. But boy, this is why I mean, although these are the least successful on a statistical basis of all our trades, they're worth going for because these are some of the biggest. That's a 42 tick trade uh, with no wiggle to take us out of our 10 tick trailer. That was a huge, huge trade. Now, the last trade that I want to discuss is actually our version of a breakout trade. And it really isn't our version, it is a breakout trade. And quite frankly, it is the only successful breakout signal that I know in all of trading. Everybody likes to say to call breakouts. I call them anticipatory breakout trades. And very, very, very few systems can do it. In fact, I don't know if any other system can. But we do it, and our auto trader data confirms that this is an incredibly successful trade with a very high success ratio. This is a tremendously high win probability. And and it does not matter whether it's a 2-line or a 3-line. The probability of success is equal for the two. And with the 50 sloping down, we took one today. With the 50 sloping down, we get a 2/3 candle close. We can see that the candle is rimmed here in pink. The pink means we have order flow and momentum with us. We're in one tick below the close of this candle, and we went down 15 ticks. Now, this was a very, very tough market to trade today. Today is Monday, and Christmas is Wednesday. And still, we had a great breakout here. Let's take a look at Friday. So we had another one. And here it is. Broke out here. Now we want these trades to stay tight to the 15. Now actually, I'm sorry, we want them to stay tight to the 15. We don't want to take them more than 3 or 4 or 5 ticks off the 50. I'm sorry, tight to the 50. And we want, if the 15 is pressing down against the trade, it's even better. If the 50 is flat and way above the trade, it's still a great trade. And here, down we go for 17 ticks. And we could just find these trades over and over again. Remember, here's a short 3-line call on an upsloping 50. We do not take it. Now, when the trend line is yellow, we do not trade. So just like when the modified 15 is yellow, when the 50 is yellow, we reserve trading because we are, in effect, moving in a trendless market. Now we're taking breaks of the 50 right now. You can see this is a great break of the 50, but unfortunately the 50 was heading down, and the was between red and between yellow. Couldn't take it, and it was a great move. And like I said, we're going to have moves that we just can't get on because of the fact that we trade with such specificity, but it does ultimately help us significantly in filtering out the losses. Now here is another one right here. Here is our 3-line break of the 50. This candle we did not get a 2/3 candle close. This one did. We have order flow, stochastic, and momentum with us. And this gave us a successful, this small trade's 11 ticks. It's a 2-target win. Here's another one. And you see, by respecting the color of the 50, right here, saved us a loss. We have you can see that this breakout came on a yellow 50, so we didn't take it, and it was unsuccessful. Then the market retraced back to the 50. We got another breakout signal here, and now down we go. That's the benefit of trading with the kind of specificity that we're looking for. Excuse me, let me just get rid of this signal here. I'm sorry. $28 ticks. So again, we want the 50 to be sloping down. It must be moving in the direction of our trade. That's a must. The 15 can be flat or pushing down into the trade. We want the candle to be tight to the 50. The closer it is, the better. And down we go. Now, that's our 3-line breakout, or 2 and 3-line breakout of the 50. We also have a 2 and 3-line breakout of the 15. Now, this is also a very, very successful trade, but it comes with a lot of specificity. It's really important that we adhere to all the rules of our trading to make this trade successful. The 50 must be heading down. The 15 must be heading down. And you must get a clean break of the 15. And here is your 2-line / 3-line break of the 15, which is it really is exactly like the break of the 50. The structural setup is a little bit different, but the principle is the same. You're breaking your, in this case, support, and the market is now in free fall on tremendous negative sentiment. Both order flow and momentum are to the downside. Now let's look for another break of the 15. Remember, we need the 50 and the 15 in total alignment. And if you don't adhere to that, this is a trade that can burn you. And here's one of them right here. 50's heading up. Now, even though it's a C candle, it doesn't matter. This is still a 2-line break of the 15. For the first time, you break above the 15. Now, you couldn't trade it because you're into this unbroken pivot here. But that aside, this would give you seven ticks. Let's take a look at a few more. Because just simply, I want to try to take these. Here's another one right here. Now remember, we always want to trade with a small gap between the 50 and the 15, and price action as close to the 50 as possible. But just for learning purposes, here's another one. You first break above the 50 right here. Now these are trades you have to watch closely for. And this is why sometimes it's difficult to trade multiple markets if you want to catch these. But these are tremendous winners and very, very successful trades. Right here, the 15 turns green. First break above the 50. Three-line call, order flow, stochastic momentum. Everything comes into alignment here. It doesn't happen that often. But when it does, that's 39 tick trade right there. There was a smaller one that we just showed right here. Actually, this is actually the signal right here. It's a two-line break of the 50, of the 15. And up you go. And there's another one right here. Now we can really take this candle by candle by candle. Let's take this. This is actually a good example of a trade. Power entry, but there's no break of the 50 and no break of the 15. No 2/3 candle close. Now we get a doji, or you can call this a this is really a doji. There's no candle body, so you can see that there's really no significant buying or selling conviction. Buyers are pushing sellers around. Sellers are pushing buyers around. Finally, you get the kind of structural setup you want. You get that big 6, 7, or 8 tick candle body coming off the 15 on a 3-line signal. And off you go. For 20 ticks. So why don't we do a little bit of a recap? Now this is not obviously buy the blue dot, sell the red dot system. It takes work. We're here to support you educationally. But it's a lucrative system. Let's look at our trend trades. Our first trend trade is your C candle entry. Second is your momentum entry. Your third is your power entry. And your fourth is your strategy entry. What do all these have in common? The 15 and 50 must move in the direction of the trade. And all of these are retracements into an intact trend. Easy, really easy to remember. Now, the only other thing that's important here is your C candle, your momentum, your power, your strategy. The 50 and the 15 must move in the direction of the trade. All of these are, let me spell it right. And finally, the only additional thing I would add is that the closer to the 50 you take these trades, the closer to the 50, um, the narrower the space between the 50 and the 15, the higher the probability of success. You want to take these trades within 20 ticks of the 50 in general. I mean, that's kind of a pretty good rule. But if a gap is open between the 15 and the 50 that's greater than 20 ticks, that increases the risk of taking the trade. And it's simply because at that point, the trend has started to come to an end. I mean, the trend is getting overextended, and taking any kind of retracement into this trend is really asking the market for a little bit much. So you want to take these trend trades early in the trend. And early in the trend is between a maximum of 15 and 20 ticks off the 50. So let's move on to our second large category of trades. And let's stick them here. We're going to call these I'm going to put them in parentheses because it's really not a reversal trade. But, and that's a power entry off the 50-day period moving average. The reason I call them reversal trades is because they are going to be against the direction of order flow, stochastic, and momentum in most cases. They really aren't reversal trades. Remember, they're a deep retracement back into an intact trend. And if you also remember what I said, they're going to be most of them are going to be some percentage of a Fibonacci retracement, 50%, 62.8%. I don't remember the exact Fibonacci retracement numbers, but they're going to be deep Fibonacci retracement percentages back into an intact trend that come off the 50 with a power signal. And just remember, you want to take those entries with a large candle body that occurs right off of the 50. If you do that, you're going to enhance your probability for success. Now, as I mentioned, these are the riskiest trades we take, but they are some of the most lucrative trades we take. You can elect not to take them, and you can elect simply to go with our trend trades. Our C candle, our momentum, our power, and our strategy. These are our most successful trades, and these have the highest probability of success. It all depends upon your risk tolerance. If you want to risk a little bit more to make a little bit more, the reversal trade off the 50 is the way to go. I'm going to call these in the trading room. And then finally, because I can't move that over, I'm going to have to put them over here. It's our last category of trade. I'll put it over here. And that is our 2-line and 3-line breaks. Our 2 and 3-line breaks. And these are anticipatory breakout signals that really work great. Now remember, it does not matter whether it's a 2-line or a 3-line. They both have the same probability of success. When they come off the 50 must be sloping in the direction of the trade. And again, like all of our trades off of trend lines, you want to have a large candle body, which shows that there's either significant buying or selling conviction in the direction of the trade. So we want that short breakout with a 3-line rim of yellow showing that you have order flow, stochastic, and momentum to the downside coming off of a 50 that's downsloping. You want that candle body to be right off the 50, and you want it to be 6, 7, 8 ticks in size. And it's exactly the same thing on a break of the 15. The 15 and the 50 must be in the direction of the trade. And you want a large candle body off the 15. And these are our 2 or 3-line breaks. Anticipatory breakout signals. The 50 must be sloping in the direction of the trade with a large candle body on a 3-line break of the 2 or 3-line break of the 50. On a 2 or 3-line break of the 15, you must have the 50 and the 15 in the direction of the trade, and a large candle body coming right off the 15. Now, in essence, these really are all of our trades. These are all of our signals, and these are all of our rules. Now, when the market is displaying any other type of setup, we define it as being in chop. We trade trend lines that have color, down trades or short trades on a red 50 and a red 15, long trades on a green 50 and a green 15. We can take our quote reversal trade off the 50. We can take our 2 or 3-line breaks, or we can take our trend trades. Now, if there are any additional questions, please feel free to email me at info@rightlinetrading.com. You can call the office anytime, 1-855-765-6681. It's a toll-free number. Leo is always here to talk to you and discuss any kind of technical issues, other trading issues that you may have. We are really, really here to support you educationally. I believe this is a tremendously successful trading system, and if you adhere to the rules religiously and are extremely conservative with your entries, it's going to make you money on a daily basis, and you're going to rarely have a bad day, and very, very, even more rarely have a bad week. So let us know the ups, the downs. Send me JPEGs of your trades, and I wish you much, much trading success.